So 1 week ago today, we were worried at the beginning of the day especially that we were going to break to new lows. 1 week later, not the case. And we've been talking about the expectations that we'd break out of this coil to the upside and that we wouldn't do it quickly. Well, now we're seeing that come to pass here with the past few days. So I'm going to break down the technical picture, what to expect from this intermediate trend that we're on, what's driving this current bounce up right now, and where we might find opportunity for a new trend trade. So let's go ahead and get started. Today is Thursday, May the 10th, 2018. This is the Market Outlook from MarketScholars.com. My name is David Settle. Thank you very much for watching tonight. Welcome to those of you watching us for the first time. Glad you found us. Keep coming back for more. Subscribe to our YouTube channel by mousing over our logo in the bottom right corner of the video, and then click on that red subscribe button. Also, click the thumbs up icon that's down below the video. That tells me two things. Number one, that you liked the video today, obviously. And number two, that you want me to do again. So we look to see how many likes we're getting to see whether or not we should be continue to do these videos for free on YouTube. So let me know. Comment on anything that stands out to you from today's video. You can do that further down the screen. Join our daily Market Outlook email list with the link that's in the video description below. Follow me on Twitter for more content like this throughout the day, throughout the week. My handle's up on the screen at DavidSettle42. Like and retweet tonight's Market Outlook tweet. Always pinned at the top of my timeline. Finally, join our Market Outlook community on Facebook. There's the address at the top right corner as well. There's also a link in the video description that will take you there too. All right, let's go ahead and take a look at the S&P 500 with the market forecast indicator. You'll notice, I was kind of looking at this, and I mentioned the write-up in the blog post today. Just a week ago, and I infamously had the tweet out there about how I can always know when the market's down whenever I just looking at the notifications on my phone, and not from my brokerage account, but usually from Twitter or Facebook. And that morning, the market was down, and everybody talked to me about I thought you said the market was going to be bullish and blah 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 blah. That was just 1 week ago. We were close to breaking below these lows. We had gotten below 2,600, but as I tweeted out, the closing prices are far more important than the open prices. We ended up with a long lower shadow there, and then from then on, the past 5 trading sessions, we've broken through. We've got that bullish candle. We broke through this near-term high yesterday. We broke through that near-term high today, as well as breaking above this downward trending line. In fact, we've gone from 1 week ago wondering whether or not we were going to be, whether we might break that support level, to now almost getting a overbought cluster, just like that. The near-term line is, got 5 days above 50. 4 of those days are in the upper reversal zone. So it's entrenched in this upper half of the chart, which we haven't seen again since right here, when we had a good bullish posture change coming off a bearish near-term low point. Here we're coming off more of a bullish one. Not that we had a higher low here, but that we have we didn't get the near-term line dropping. The other difference between this peak, where the near-term line was up there for multiple days, we never did get a green moving average, which means you're above an upward trending moving average. So we were down below. We were still that was still an impact on the 30-day moving average here, 6-week moving average. So it was still pointed lower this whole time we were above it. That's why it's yellow. But you notice now it's green, which means it's rising and we're above it. So again, big difference from there too, which again suggests, and also now you got the intermediate line close to crossing into the upper reversal zone, which remember it already has on some of these other indexes. In fact, if you take a look, the market sentiment is much lower for the Dow. We pulled back a little bit more here. Haven't quite broken above that near-term high quite yet. So its intermediate line still is the lowest. It's got the, remember this is the mega cap. This is the blue chip index. All 30 of these are in the S&P 2, but this doesn't include the other 470, of course. And so that's, you've got a little bit of laggards from that perspective. From the NASDAQ, though, getting above 91 now in the intermediate line, the near-term line entrenched in the reversal zone. Market sentiment still falling, but still at least it's above 50, and the momentum line spiking now 2 days after that bullish intermediate confirmation signal we talked about 2 videos ago that suggested that we would bounce. And you can see breaking up above and now getting closer to these highs that we had in March and in January. And the Russell 2000, out of all of them, again, strong bullish posture. Near-term line supports that bullish posture coming off this bullish near-term low point. But look at this. I mean, we're at 1603. The highest close here, the highest high is 1615. The highest close is 1610. So I mean, we're only excuse me, 1610.71. So we're literally 7 points away, exactly 7 points away from reaching all-time highs in the Russell 2000. Now, again, a week ago, we weren't so bearish in the small cap index like we were on the S&P. Is another sign that we really weren't that bearish at all in the broad market as a whole. If you keep watching these videos, I haven't been that bearish. We've been leaning towards this bullish breakout for how long now, right? Breaking above this line. And that's part of the reason why I kept getting the messages. When are we going to get this breakout? Well, you know, again, patience. And I never did mention it would be a quick breakout, right? In fact, I still think we're going to kind of make our way and muck our way up here. Let me zoom out. I still think we're going to muck our way up in here. We're not going to break up above all-time highs anytime soon on the S&P at least. Now, the Russell 2000 maybe, and that's a good sign that it's been outperforming, that has a more bullish market forecast than the others when that small cap index leads. That's a good sign for risk appetite. You usually will see that when you're coming off of market sentiment lows. You'll see risk appetite lead your way higher, and then towards the end of a market sentiment peak, you'll see large caps lead the way higher. In fact, here, let me come over here really quick to the ratio charts, and then we will take a look at small caps to large caps, which is pretty much right here. This is more mid caps, but here's small caps to the diamonds. If I were to zoom out on this to a year, you can see as we were heading into the end of that market sentiment trend that peaked in late January, diamonds. So IWM outperforms and this goes up, and diamonds outperforms and this goes down. So we started to come off that low point end of January, beginning of 2016. That's when we really had that start of that market sentiment rally. Small caps led the way, and then large caps kind of took over from there and led the way into the end of the market sentiment run. And now you see small caps are leading the way heading into a new bullish market sentiment run. As always, I wanted to take this minute here to remind you, if you're watching the Market Outlook from the blog, of everything else you have here. And if you're not watching through the blog, you can. Just marketscholars.com and then go to blog here, and you'll see the Market Outlook always at the top of the blog, generally. We have Brandon's Buffett report. The Berkshire Hathaway annual report is also in there too, as well as all these charts that we're using and how to import them will usually be over here as one of the more popular posts. Really great response that we've gotten to sending those charts out to everybody. Remember, you can discuss the video in the forums by using this link right above and down here at the bottom. If you want to join our daily email list, you can just fill that out. Click on that orange button. Again, you can do all this while you're watching. And then I always ask, if you want us to keep doing these videos, tell me. And the way you tell me is with 3 clicks. 1 right here to like tonight's Market Outlook tweet. Number 2 to like the Market Outlook Facebook post. And then 3 to like it here with this big green button on the blog. So back to the charts, you can see now that we are now entrenched. I mean, barring a big down day tomorrow to finish the week, we're more than likely going to get a nice, good bullish close to the week here, closing above multiple weeks' highs, depending upon how we finish with that one, the high there, 27.17. Currently above it, so we'll see how we finish the week. As I mentioned before, that MACD rolling up. Again, I don't think we'll roll up to these highs or new all-time highs. I think we'll kind of do this stair step. So we'll roll up to a lower high, but that just means, after pulling back, the orange line, the 50-day moving average will go back up. and we'll start to make our way up higher here. This one didn't pull as far back, and so we were able to bounce up to new highs pretty quickly. I don't think we'll bounce up to new all-time highs here pretty quickly on the S&P 500. You can see there's the Dow Jones Industrial Average, your NASDAQ Composite, and of course this one is this is the Russell 2000, and you can kind of see what its MACD is looking like there. It already is making its way back up, and again, I don't think we'll get up to new highs here. I think we'll do that 2015 thing where we start to grind our way to lower highs. But you know, the 50-day moving average is rising again. The 200-day moving average has always been rising, and the MACD, which is the gap between the two lines, is now rising again because of this week's bullish move. When you look at the 3 green arrow chart, you see that we have 3 green arrows and a rising moving average. So you really can't get more bullish than that right now. When you look at the 3-line version, you'll see that, you know, again, how we've crossed above these old near-term highs in red. MACD and stochastics both rising above their moving averages, both moving into higher levels. Expect that MACD here to breach and move up to a higher high than what we have on this one, now that we're crossing up higher highs there. And you'll see that on the Russell 2000, you'll see that we have broken up above to new highs already on the Russell, and probably will start to get back up into this area, 15 to 20 points, as these moving averages now diverge away from each other to the upside. When you look at today's intraday chart, you can see, you know, we got a new 4-week high point today. So again, just a week ago, we formed a new 4-week low point. And now, 1 week later, we are forming a new 4-week high point and trading obviously much closer to the 4-week high than we are the 4-week low. So, you know, higher high from green to orange. This is yesterday's high to today's high. Higher high, higher low. Low is right at the beginning of the day. The high was towards the end, and we closed up towards the high. So, you know, as bullish a candle as you can get. And of course, closing, there's the old 4-week high point right there. And you can see how we got up above it, came down and retested it for a support, and then held that breakout so far above it. So good sign from that perspective. You can see the volume slightly below average. The average volume continues to move its way lower. And there's your volume still pointed down. The ATR relative to price is still continuing to point down too. When you put this into context here, you'll see that you know, we're coming down from high levels. We got a long ways to go before we get back towards the low end of that range. So very good sign for the broad market from that perspective. Looking at the VIX here, right on this one here, you can see getting down. So it's not quite able to continue to move lower. There's going to be some support at 12.5. That was the old high point that we had all throughout most of 2017. So that's going to act as a support level as volatility drops. You can see the MACD and the stochastics. Let's go back to that hourly chart there. You can see after coming, you know, we are forming a lower low. Now the MACD is above its 0 level. We'll see when the stochastics gets above 50 to see where that new high point is going to be. Obviously, unless it's above that level, it's going to be a lower high point. And then when you look at the volatility here compared to the back month, the VXV, you can see right smack dab in the sweet spot of bullish zone, right at 85%. So, I mean, all across the board, you're getting some good bullish indicators. Doesn't mean we won't get some short-term pullbacks. And I don't think we're going to get a short-term pullback anytime soon, as we are just 5 days into this near-term rally. And we're entrenched in the reversal zone. So we might not continue higher like this at this pace, but the next day or two, we'll probably just grind higher and then eventually roll back to a new near-term bullish low point below 50, above 20, and then re-engage. Because again, now that we've crossed above 50 and we've really taken off on this intermediate posture, the expectation 1 to 3 months, considering where market sentiment is, probably more towards that 2 to 3 month period is what we're expecting for this bullish intermediate run. There might be brief bearish periods like this within that 2 to 3 month period. By the time we get this kind of a move, that's the expectation, is what from here to here, and this one was 5+ months. That was a long time, but from there to there, 2 to 3 months, because of where market sentiment is currently down here, dotted orange, that's the expectation going forward now. Now, with all this resistance in the area, it might not look as pretty as this, but the bias will be, the trend, the posture will be to the upside. That's the expectation. So to summarize, the posture is strongly bullish, and it's catching up on these large cap indexes to what we're already seeing on the NASDAQ, and especially the Russell 2000. The Russell 2000 is close to all-time highs. The S&P and Dow have more to catch up. The Dow especially, it pulled back the most. But now we're leaning to the upside for the next couple of months. That's the expectation. That sets up opportunities for new trend trades at this point in time. Of course, where the near-term posture has been over the past few days, how much more run we have left in this current near-term run. We might not go up as much as we've had this past week, but it's been a good positive 5 days. And now we're now we're expecting a series of higher highs and higher lows on that near-term line. So what do you think? Do you agree? Do you disagree? Let me know with that poll that just popped out there in the top right corner of your screen. Just one click. I only got like 17 votes a couple of days ago. So let's see. Let me know what you think there. And if you don't agree, and I don't expect everybody to, let me know what you're seeing down in the comment section of this YouTube channel down below. All right, when you take a look at the performance and what's driving this price action now, you can see again, this is from the open today, not from yesterday's close. So it doesn't include any gaps here. But you notice gold was everything pretty much was right flat on the day, except for a few outliers. Right, you have the orange line, which stands out. That's crude oil is usually pretty darn volatile. Was down on the day initially, down at the nearest lows in the afternoon before a late rally. You can see small cap stocks were outperforming early today, but then during the afternoon pulled back, whereas the S&P held its ground a little bit better during that pullback, which is what you'd expect. But the biggest outlier was emerging markets. Emerging markets, which have been under fire here so much, really kind of taken off and taken, really moving much higher. That's a positive development for that particular asset class. If I zoom out, crude oil has been, during the past few weeks, 2 weeks, crude oil has been our best performing asset class. And look at small cap stocks making its way higher, again, a positive sign. But the strong dollars had its impact on emerging markets. Until today, there's brown right there, emerging markets. You can see for the past couple of weeks, emerging markets have been really lagging, really falling behind the S&P. I mean, since this low point right here, look how the S&P in black has really lagged. The emerging markets lagged behind that growth in the S&P until today. And today's move kind of catching up to that. And you can see small caps also leading during this bounce higher off of that low point from last Thursday, from a week ago. Really taken off, and you can see crude oil also leading the charge off that low point. So it's been, energy has been the leader in this area, and small caps leading up as well. And down here at the bottom, these safe haven asset classes, interest rate sensitive asset classes rallying. You can see one other positive mover today was long-term bonds. Typically, long-term bonds don't move up with stocks, but they moved up today. In fact, if you look over here, emerging markets had the biggest performance today, up 2%. Nothing else was, the S&P and long-term bonds matched their gains, almost a 1% gain. So again, that's not a typical correlation there. You can see the dollar was down on the day, gapping at the, remember how the other chart doesn't show the gaps, right? So the dollar was down on the day, and that helped gold lift its way higher. And of course, helping emerging markets. Emerging markets have been struggling from the strength that we've seen in the dollar. If I were to come back to a longer term view and take a look at the dollar index here, you can see how we're up to that 200-day moving average, and it's finding some resistance in this area from these old low points over here around 93. That's kind of where the dollar is starting to find some resistance. Now, you can see the trend has been bearish and the 50-day moving average is rising. We're coming off a divergent low point, and we'll see. We kind of have to break this 93 level for there to be sustained strength in the dollar. Otherwise, the last time we got close to the 200-day moving average and the 50-day moving average rose, we bounced down to new lower lows, and we'll see if that ends up being the case again. You wonder if it will get down to lower lows in the next run because of how big the bounce up is. This little breakout we've had over the past 3 weeks has really kind of broken us up above that trend line and broken us out of the sideways move. So a little different in that regard, but you can see how it's kind of stalling and halting, and that's going to have an impact on these asset classes and how they perform. And stocks generally do better when the dollar's in a decline, more so than when the dollar's in a rally, generally speaking. Not always. Stocks can do whatever they want for their own reasons. But generally they do, because they're priced in dollars. They when the dollar goes down, the price of anything priced in dollars goes up, including stock prices. All right, quick glance at the different asset classes on this chart, and I've gotten rid of the video so you can see all the the different pods here. You can see how they've all been performing. The dollar's been such an outperformer. Look at its strength on the intermediate posture up and above 90, well up above its moving average. You can see crude oil has been a strong performer, but showing some clusters. So there's some signs of weakness there. But again, if the dollar were to pull back, you would expect crude oil and commodities to continue to bounce up. The intermediate posture for commodities is down. That's why it's pink. But we are above an upward trending moving average. You pull down to it. So weakness in the dollar will help all three of these start to make their way up. And with gold coming off of a bullish cluster, and also help like you see BWX coming up off of a significant low point here. Cluster of bullish clusters. So these foreign bonds and EEM and things like that will do better in that environment when the dollar is strengthening. You can see the 10-year note kind of peaking at this level. It's got a strong bullish posture. It's above a rising moving average, but long-term bonds are kind of pulling back towards that moving average right now. This is even longer than 10 years, making its way back up towards a declining moving average with a bullish intermediate posture coming off of a cluster from a week and a half ago. And we mentioned that emerging markets had a strong move today. You can see which ones. I mean, look at these two, Mexico coming off of clusters, Brazil coming off of clusters, both of these really making their way higher. You can see Russia breaking out above a moving average. Canada continues to show strength, as well as Australia from a developed market standpoint. China also breaking up above now a rising moving average. South Africa breaking up too. So you've got a lot of emerging markets showing some strength. They've got very low intermediate lines. Intermediate lines at 30 here. The intermediate posture is at 6 and 16 over here. That's why they're rising, but they're still pink because they're below 20. So they've got some room to outperform. From a developed market standpoint, Canada and UK still showing some outperformance. Germany starting to pick up the pace a little bit, up above a rising moving average too. So really strong intermediate trends right now for these developed nations, with some relative strength starting to show up in these more emerging markets. From a sector rotation standpoint, financials continuing to lead the way higher. I can move this up because back over here these numbers include the gap. So you can see without the gap, utilities lagged behind, but by the end of the day it had an outperformance with long-term bonds rising as much as it did. You can see financials had a decent day from the open, but gapped down initially. And that's why they only finished today with 0.75%. There's the S&P 500 there. So all your outperformers up above, your laggers behind, and discretionary really lagging behind one of the worst performing sectors and staples. Still lagging, but basing, finally starting to base a little bit. Whoops, not that one. I wanted to show this one here. You can see Staples performance down here in the bottom left corner once it loads up. It's starting to base out coming off these clusters. And again, as I mentioned before, financials are finally getting above its moving average. There's your pocket of strength right now, technology and energy. Those are your two biggest winners of recently. They got strong intermediate postures. Discretionary too, but look at the cluster that showed up, the overbought cluster. And then again, combine that with this relative weakness in today in that particular sector. You also got a cluster in the real estate sector too. But staples and utilities bouncing up at the 3 straight down days, bouncing back up with that rise in bonds. So you can kind of see where the strength is and where new strength would be. So financials coming into play, industrials coming into play with the rising intermediate line, materials with the rising intermediate line. So they're lagging. These areas are lagging, but they're starting to catch up to the two big winners, and we're starting to rotate out of relative strength, out of discretionary into more of these areas, including, as you can see, healthcare there. Now, one of the stocks we talked about yesterday that's been contributing to the relative strength in the technology sector is NVIDIA, and had earnings out in the afternoon. You can see the earnings coming down, bringing the price down to 254, 255. Remember that just a couple of days ago, we were sitting at here, what was the close on that day? 250. So we're kind of just pulling back, and we talked about how NVIDIA has a history. If there's a volatile move already preceding the announcement, then we just end up trading within that volatile range. Whereas in other areas, when we've been more tight, then the earnings announcement breaks us out of a tight range. And obviously we did not have a tight range coming into this announcement, and we're trading within the volatile range that we'd already set before that. So it's actually a positive sign for, remember the two strangles we did yesterday. If the short strangle expires worthless, now we have a long strangle, and depending upon which side it picks, if it holds this old high point for support and bounces up and continues higher, which is what we taught the expectation yesterday with that breakout, then we can close out the long put side of the long strangle and let the long call continue to run. Another stock that's been, has had some weakness today, earnings related weakness, is Yelp. Yelp, if you take a look at the chart, over here, you can see, it had earnings coming out in the aftermarket too. It's had a good move up to resistance, and so far earnings has not been able to get us through. In fact, earnings has brought us down a couple of bucks off of this high point. So considering that we have a bullish intermediate confirmation signal here heading into the earnings announcement, and it was a negative number there. But now it's going to be a matter of, 45, 46 right now in the after hours would put us right about there. That's kind of where we're at. So we'll see if this pullback on the earnings gets us down past through this Fibonacci retracement zone of this rally. Otherwise, if we come down to this moving average on a earnings pullback and still bounce off of this trend and continue to move higher with a strong posture, then today's move, this move here, essentially can be seen as a buying opportunity. Dropbox is another stock with earnings out. You can see it had earnings out here too, 8 cents. You can see its numbers down just a smidgen, not nearly as volatile. It was up to 60 cents. It basically lost all of that so far in the after hours market down here to this 31.40 level. And again, if that's the pullback that we get, if we can hold that old high on an earnings related pullback and bounce, which generally happens. A lot of these initial reactions on earnings are in low volume environments. So if we bounce off of these and move higher, then you can see opportunity for growth. And a stock, some of these technology oriented stocks but consumer related, you can see that there's some relative weakness in these areas right now. But in terms of technology, these stocks are in a sector that's got some strength. So these kind of short-term pullbacks may ultimately end up just to be buying opportunities. So one of these stocks for our trade idea today, one of the stocks that's in that kind of material sector that has, as you can see, Newmont Mining, with the weakness we've had in gold coming off the cluster, you can see a little bit of a cup and handle pattern forming here, a resistance near 42, a shallower pullback off of that touch at resistance. You can also call it an ascending triangle. Depending, it's a double top where after the second peak, it's a much shallower pullback that ends up being pretty bullish, especially getting back up above a rising moving average, which will turn that yellow line green again like it did over here. And look at the intermediate line and market sentiment both rising right around the 50 area. So there's an opportunity, what I talked about before, today could be an opportunity for trend trading, and knowing that there's, materials, one of those sectors that can catch up to the strength that we've seen so far in energy, which is kind of its partner in crime, right? Materials and energy tend to go together, and then there might be an opportunity to bust through that 42 resistance and trend our way higher here for the next few months. And of course, one of the better ways to trend trade a stock like that, and again, trend trading means you just ride the higher highs and the higher lows until the trend ends, is to either buy the stock or come over here to a longer term option that gives you plenty of time. And so we'll go out to September and go towards the 70 delta to try to mimic the stock. So for every dollar move, you'll get 72 cents. But you'll also have some time decay in there as well, but it will cost you $4.70 instead of $40.42. So you can see, if the stock, but the Theo price from a broad market perspective, from a comparison perspective, if I bought 100 shares up here and the stock went up $1, I make $100. $100 on 4,000. That would be there we go. A return $100 off of roughly 4,000 of about 2.5% is what we'd be looking for if I were to buy the stock. If the stock goes up $1 and I own that 72 option, which was which one was it now? This one here, the 37 strike. And if I were to buy that 37 strike, you notice that it'll go from 539, I'll go from 470 or 464, that's the midpoint between these. It'll go from 464 up to 539. That ends up being a 16% return. So instead of a 2.5% return, I get a 16% return, and I get a $4.70 cost instead of $40. So 10 times less capital required to get into a trade that will behave similar to the stock, not exactly the same because it's only got a 72 delta, but you can see if it were to continue to trend higher, then you can see the kind of return on a percentage, on a relative basis that we get. Of course, whether you buy the stock or buy the option, you want to set it up in a manner that if you were to get stopped out on either one, if it were to turn around and you get stopped out on either one, you lose your set amount, 1% of your account, 2% of your account, whatever the case is, no matter which one it is, doesn't matter, stock or option. Alright, so tell me what you think about today's trade idea. Let's discuss it in the forums. There's a link again. I showed you a link before, but there's a link that just popped out there in the top right corner of the screen. Click on that link. It will take you to our forum section. Let me know what you think about today's trade idea. Let me know what you think about the market posture. Let's chat about it. Let me know any questions you have. You can also comment on each other's comments there. That's the whole point of a forum. So it's not just between me and you. It's between everybody that's watching these videos here. So thank you again for watching. Remember to subscribe to our YouTube channel, like today's video, comment on anything that stood out to you. Follow me on Twitter for more content like this, as well as join our Market Outlook community on Facebook, as well as on MarketScholars.com. Hit that subscribe link that's in the top right corner of our homepage. As always, thank you very much again. Have a great evening. We'll see you tomorrow.